How I made $574 today. Trading gold. Personal confluences, chart type, range charts used to eliminate noise and focus on true directional intent. Market structure, confirmed trending environment with clear directional bias. Obstruction check, no significant support or resistance zones between entry and target. Profit target zone, aligned with previous session lows and within range of expected move. Trend alignment, trade direction supported by macro session flow and microstructure. The 50 range chart confirmed that the 105 tick profit target was realistic within the current trend structure. There were no significant reversal zones or consolidation areas in the way. This aligned with my risk plan, allowing the trailing stop at +85 ticks to activate only after price had cleared key resistance levels, increasing the odds of a full target hit or a strong partial. Since there were no candles immediately prior to my entry, 10:59 a.m. at 3419.0, I used data from the start of the session to frame my decision. The market had already dropped earlier to the 3395.0 area, which established a key intraday low. Given the lack of obstruction in price structure and alignment with the prevailing trend, I assessed that the odds were high for price to revisit that area. This gave me confidence in targeting 105 ticks, with my ATM strategy activating a trailing stop at +85 ticks to protect profits while still giving room for further downside movement. Data to the left of the entry, drawn from previous price action, showed a clear path back to the prior lows, giving me confidence that 105 ticks were achievable without significant obstruction. My entry strategy combines range-based analysis for precise, noise-free entries, with time-based candle structure, 15 minutes to 4 hours, for higher timeframe confirmation. In this trade, the time-based charts supported the trend direction and showed no significant resistance ahead, while the range chart provided a clean entry point aligned with my profit target and ATM trailing stop strategy. In trending markets, short-term reversals are common and often trigger emotional responses that lead traders to exit positions prematurely. However, these pullbacks typically occur around areas with a concentration of stop-loss orders, providing liquidity for larger participants. Instead of signaling trend failure, these moves often strengthen the trend by clearing weaker hands and reloading momentum. Recognizing this pattern helps reinforce my confidence to stay in the trade when price temporarily moves against me, as long as the overall structure and confluences remain intact. My entry was supported by a breakout of a strong support, resistance zone, confirmed by lower timeframes showing decisive candle closes in the direction of the move. This aligns with my approach. Range charts for entry precision, lower timeframes for breakout confirmation, and larger range, time-based charts for structure and target validation. I finished the day with $574. I was done trading by 11 a.m. Like and subscribe if you want more of my trade analysis.
Yeah, this is not a fire drill, the real thing.